Thank you.
Okay, so again, I'm Shannon Coppinger, and I'm not sure if you guys can see me yet or not, so I will just proceed forward. And we hope that this forum today brings and answers some questions for you guys. I know this is a sensitive subject, and it's been a very long year, a little over a year now, since the tax law was implemented in December of 2017. And so since that time, we worked with the IRS, GSA, and our own internal general counsel, as well as DoD general counsel, to make sure that we are implementing the law according to how it was put forward. So if we can go ahead and go to slide 3, we'll skip the agenda and just go forward. Yep, there you go. So, so prior to the enactment of the new tax law, the majority of all the civilian PCS entitlements were not taxable. However, that's no longer the case. So, as I mentioned a moment ago, we worked with the IRS and GSA over the course of the last year to really look at all the guidance that was received, and we received several pieces of guidance over the course of the entire calendar year. And so with each piece of that, we look to implement a system change in IATS, and IATS is a system that we use to process your travel claims out of DFAS Rome, and I have a DFAS Rome representative here with me, and then I have Connie Rabel here with me as well, and she is from our travel team. So that system change was implemented on October 30th of 2018, and it did enable us to go back and retroactively collect the tax withholdings from that January 1st timeframe until October 29th. And so what we did is we went ahead and remitted those amounts to the IRS, and so that process did create a tax debt for the traveler, but that debt was owed to DFAS and not the IRS because we did remit those taxes for you.
So it's pound first. Yeah. Oh.
Somebody has a hot mic. Okay. So I know that we're all getting ready to file our taxes, or you already have. So I do want to call your attention to the 2018 W-2 section. So we recommend that travelers do file their 2018 taxes by the IRS deadline. And as we'll talk about later in the slide deck, we will be issuing corrected W-2s later this year. And that's going to be for the household good portion because unfortunately we were not able to implement that section of the tax law quite yet. So moving into that last bullet there, that's really the biggest thing for you guys, and the example that I will use throughout this briefing is the household good piece, so that payment to vendors. So the taxable entitlements that we pay directly to you, we were able to get that system change implemented on October 30th of last year. But the entitlements that we pay directly to the vendors, so through Transcom, that's the piece that we're still working through. So if we can go ahead and go to slide 4. I put this slide in here because while we do pay the preponderance of the civilian PCS, we do not pay all customers. So we included this in here just to make sure that everybody understands that this briefing and the way that we implemented the law applies directly to these customers. Just a note, we do not pay the Air Force. So I don't know if there's any Air Force in the room, but we do not pay their civilian PCS. So we'll go ahead and go to slide 5. So this just gives you a visual for what's transpired over the course of the last several months, starting with December 2017 when the tax law was implemented, and then we issued the W-2s later in January of this year. And then the one thing I do want to call attention to on this slide is in that upper right-hand corner. And we'll go through this later in the briefing, but WTA is withholding tax allowance, and RETA is a relocation income tax allowance. So in that box, if the traveler elected to receive WTA as part of their travel claim, there is a deadline to file the RETA. and that is April 30th, and that's 120 days after the beginning of the calendar year. So I will reiterate that throughout the briefing. That's been a question that's been pretty prevalent throughout all of these sessions, so we'll make sure that you guys understand that as we go through. So we can go ahead and go to slide 6. So while the majority of the PCS entitlements are now taxable, there are a few exceptions, and for those, for you guys specifically in the OCONUS group, the long-term storage of household goods for OCONUS duty assignments is one of the items that's
in Europe virtual space meeting. You are now entering the virtual space.
Hello. So POV shipments to, from, and between OCONUS locations, and then residential sales. So I do want to point out that in the bottom section of this slide, that DFAS.mil/tax law change, that is really going to be a great resource tool for you. What we did is that /tax law change is a landing page, and we are dedicating that to all things civilian PCS tax law change. And so what you'll find on there is the list of taxable entitlements, the list of non-taxable entitlements, and each of those has additional information. So, you know, all the things we tried to include in this briefing to give you guys as much information as we could, but we really recommend that you go out there to get some additional resources.
Ma'am, for those of us without the slides, it was DFAS.mil
/tax law change.
/tax law?
Change.
Thank you.
Okay, we'll go on to slide 7. So we went ahead and listed the taxable entitlements, both previously taxable on the left-hand side and then the new taxable entitlements after the new tax law. I do want to point out, it might be kind of small for you guys there in the room, the notes at the bottom. So we have been getting a few questions on things such as TQSA, LQA, RAT. So those entitlements are not part of the tax law, and those do remain non-taxable for you guys. So moving on to slide 8. So this is going to be, I've been considering, just to help you guys with a frame of reference, a couple different categories of travelers. And so the category of traveler really is all based on when we were able to get that system change implemented last year and when we applied the tax law. So for 2017 PCS orders, or any PCS orders that were issued prior to January 1st, 2018, we did not apply the tax law to that group of travelers. So for all of those travelers, while you did not have the new PCS entitlements that were taxable, I do want to point out in that lower section there, that last bullet, the process to withhold taxes for the temp storage did not change. And so even though this expense is often paid directly to the vendors, and as I mentioned previously, we're still working through that process, but for this entitlement, we were able to properly collect the taxes. And so with that process that's currently in place, we always withhold the taxes and remit those to the IRS on the traveler's behalf. And so that transaction is what creates that tax debt for the traveler. And so that process did not change. So while in 2017, if you had orders issued then, you did not have potentially a debt for the new taxable PCS entitlements, you may still have received a debt letter for the temp storage. And that's completely normal, and that's part of the process that we've been using for the last several years. Okay, so we'll go to slide 9, and this is where we're going to have the majority of the travelers, I would assume. And for orders issued in 2018, there's 2 categories given the date that the reimbursement claims were processed. So a lot of words on this page. I will just highlight a couple things and talk through it. So that first section there is for claims processed before the system change, so before that October 30th time frame. And with that group of travelers, because the system change had not been implemented, that created tax debts for about 3,500 travelers once we were able to remit those and withhold those taxes. So for this group of travelers, though, the 2018 W-2 is accurate, and it does reflect the withholdings paid by us to the IRS. So regardless of if your claim was processed before October 30th or after, those 2018 W-2s that you received in January are accurate for the direct reimbursements paid to you. That does not include the household goods shipment piece. So for that second group of travelers, somebody has a hot mic. So in that center section, there, that's for all of the travel claims that were processed after that system change was implemented. And so for this group, we did apply the proper tax withholdings, and those are being accounted for from the and withheld from the reimbursements. And that means that there'll be no additional debt owed to us for those additional tax withholdings for the reimbursements paid by the traveler. And I'm going to go ahead and ask one more time. Somebody on the phone still is not on mute, and we're getting a little bit of feedback. So just to be respectful to the group. Okay, so all that being said, the piece that we're still working to implement is the payments made directly to the vendors. And so, as I mentioned in the previous slide, the temp storage process did remain intact, and the taxes for those entitlements are being properly withheld and remitted to the IRS. And so, although the process to withhold the taxes for the temp storage did not change, the tax law did actually adjust the time frame for those taxable entitlements. So prior to the tax law change, any storage time somebody please has a hot mic. Sir, whoever's speaking, you're on a hot mic. If you could please mute. Okay, so prior to the tax law change, any storage time exceeding 30 days was taxable. But the new tax law did make the storage taxable starting at day one. So we are currently withholding those taxes and starting at day one. And so that process is currently ongoing and will not be any adjustments in the future. We're just still working on that household goods shipment piece. Okay, so we will go on to slide 10. So this is for what we call our current group of travelers. So anyone who had claims processed after that October 30th time frame, or anyone who is going to be PCSing in the future. And so for this group of travelers, we will, as we did at the end of last year, we're withholding those taxable entitlements and remitting those to the IRS. And so again, we did put the tax rates there for you guys. That's been a source of a question, the 22%, 6.2, and 1.45. So those are the taxes that we use to withhold those taxable entitlements. And again, to touch on the payments made to vendors, it's something that we're still working through. And so we're hopeful to get that secondary system change implemented later this year. And that process will again create tax debts for the travelers for the household goods shipment piece. Okay, so moving on to slide 11. This is where I'll go through the debt letters. So we issued 2 sets of debt letters the first week of February. So for those of you that were part of that 3,500 group, you should have already received those. We did get some questions in a prior section or session that people had not received. So I will tell you that those that we have followed up on, I've only had a few that actually did have the tax debt. The others did not actually, they were not in a debt status. So if you have questions, we're happy to take those and look into that, or I'll provide the call center information later on in the slide deck, and you guys can use that as a resource and email or call to get that information. So The two different debt letters, one was for the group of travelers with reimbursement claims processed between that January 1st and October 29th, and so those were for the new PCS tax law changes, and then the other was for the temp storage. And I did put there on the slide that the average debt for both was $250, and that was completely coincidental once we calculated that. And to give you a little bit of deeper perspective, for the new PCS tax law, we did have about 47% of those debts that were less than $100. So while we never want to put anybody in a debt status, some of those were substantially low on the dollar spectrum. So that center section there, it's something that I mentioned earlier, that relocation income tax allowance, otherwise known as RETA. And so most employees will be eligible to file for that RETA. And what you're going to do is you're going to file your income taxes for this year, and then you file the RETA claim. So you have to file your income taxes first, and then you submit the RETA claim form, and you submit that to DFAS Rome. So I did put a note on here that if you were one of the travelers that did receive the debt letters, you can file your RETA claim prior to settling that debt. So those are not together, they're not linked. You are able to do one before the other. And I do want to say, you know, if you needed to do that to get some additional assistance or money back, that you can do that. So in the last bullets there, just what would you like, what the traveler will see in the debt notification package. And it's going to have a lot of information. It's a lot of words on the page, but there is information on there to how to set up a repayment agreement if you're not able to pay the debt within the 30 days. Okay, so going on to slide 12. So, you know, one of the biggest changes in the tax law was the household goods shipment piece, and that's part of this third-party payment, the payment to vendors. It's all synonymous, all of those phrases. And we're currently working on the process to properly account for those taxable expenses. And we're doing that in coordination with Transcom, OGC, DOD, General Counsel. So we're doing that so that we're working through this process the same as we worked through the prior process last year. And this is a little bit delayed because we did not receive an official ruling on the household goods shipment piece until it was almost December. It was late November last year. So that's why we're doing this in two separate pieces. Again, I do want to stress we did put some information on here on that temp storage, that it is the current process, except that we are calculating those taxes starting at day 1 versus day 31. And again, I do want to stress, moving into that last section there for the 2018 tax returns, that you do go ahead and file those tax returns by the deadlines. And then once we issue those corrected W-2s, you guys can file your amended tax return, but then you can also file for a supplemental RETA. So you can do that twice. If you file your tax returns right now and file for your RETA, you can do so again later in the calendar year. Okay, moving on to slide 13. So this has a little bit more information for you guys on how to file your RETA claims. It can be a little bit confusing, so I did want to put in here the instructions, and those are on the dfas.mil website, and you can get to that on that flash tax law change. All of this, the links are there for you on that landing page. And the e-tutorial is just a visual walkthrough of the form, and it'll help the traveler if they need some additional assistance. There are, unfortunately, 3 groups of travelers that are not eligible for a RETA, and I did list those there for you. So those are the new appointments, if you're assigned under the Government Training Act, or if you're returning from an OCONUS location for separation, and that does include retirement. Okay, so we're going to go to slide 14, and I am going to let Miss Lisa Isello walk you guys through the WTA process.
Okay. Thank you, Shannon. As Shannon stated, I'm Lisa Isello. I'm here at DFAS Rome and the Finance Director. So on slide 14, we're talking about WTA or withholding tax allowance. The withholding tax allowance, it acts as an advance on the RETA. It's computed at 22% and applies to the federal tax withholding. It, in and of itself, is a taxable entitlement. Okay? It's elected by completing the employee agreement form found on our DFAS.mil website. And the completed form, submit it with your PCS claim. Once WTA is elected, it applies to all future reimbursements. However, it's not retroactive. If you decide to submit your WTA election with your first claim, say your en route travel, it will apply to that. It will apply to your next submissions, your subsequent submissions of MIA, TQSE, and so on. It cannot be applied selectively to specific entitlements. Electing WTA can result in a RETA debt. Okay? If your federal taxable income after deductions is less than 22%, a WTA debt will occur in the RETA calculation. So WTA is computed at 22%. However, if an employee comes in at the 12% federal tax bracket, then the WTA was overpaid and it incurred. Another note, if WTA is elected, by regulation, you're required to file your RETA by 30 April or 120 days into the new year after your payments were given to you. If not, you will receive a debt letter. That's regulatory. If you elect WTA, you must file the RETA by 30 April or get a debt. Okay? We do have a few examples here. I'm going to go through the first one. It's also my understanding that these slides will be made available to you. And when we do that, we're working on a couple more examples to provide in here. This first example is a CONUS to OCONUS. It was requested in some of the town halls that we provide an example of OCONUS to CONUS and then an example of a single person. Most of these examples in here are married filing jointly. So we are working on those to incorporate into the deck. And like I said, it's my understanding this will be made available to you. If not on our website, also on Army channels. So the sample claim on sample claim number 1 on slide 16. I just also want to say that there's many factors that affect a move. No two moves will look exactly alike, and no one's move will look exactly like this example. So please keep that in mind. In this example, the 2018 rates for per diem and mileage were used. In this sample claim 1, this is a CONUS to OCONUS move with IBA airfare. And there's also the third party or government procured storage and shipment included in this example. So in the first, section 1 are the PCS entitlements. So the per diem, transportation, reimbursables, dependent per diem, dependent transportation, and miscellaneous expense allowance. For total taxable entitlements, $2,605.52. There's the federal income tax withholding at 22%, FICA at 6.2, and Medicare at 1.45 for total taxes of $772.54. So the amount reimbursed to the employee is $1,832.98. So that's the PCS entitlements. The middle portion is the HHG storage and HHG shipment. So HHG storage of $800, HHG shipment of $8,500 for total third-party payments of $9,300. Federal income tax withholding at 22%, FICA at 6.2, Medicare at 1.45. Total tax is $2,757.45. So that would be a debt to the traveler. We would remit those taxes to the IRS, then the traveler owes DFAS the money for that. At the bottom of the page, the RETA computation. So in this calculation, the traveler, they did not elect WTA above, so their total RETA is $3,044.04. In this example, again, it was a GS-14, one dependent, married filing jointly, their wage income, $114,500. All these things play into that RETA calculation. So I'll go through the rest of these samples pretty quickly. Sample 2 is a CONUS to CONUS with WTA. So this one is an example where that WTA is calculated and added into your total entitlements. And then they're also taxed. So in this RETA calculation, again, this traveler came out at the 22% tax bracket, so there were some additional funds after considering WTA in the RETA calculation, so there were some additional funds that went back to the traveler. Sample claim 3 and 4. I'd like to go over to sample claim 5, please. This is a CONUS to CONUS with airfare and WTA. However, this is an example where the traveler was in a 12% tax bracket after they did their taxes. So you'll see that there's a negative RETA. They collect WTA. So the WTA was issued at 22%. They did their taxes. They came in for their RETA, and they were at a 12%. We have a negative RETA situation. Okay. I do want to also state that to file the RETA for taxable reimbursement, for tax reimbursement of substantially all of your federal, state, and local taxes, RETA does not cover your FICA and Medicare. If you go over to slide 21, there's a list of resources, and I'll turn it back over to Shannon.
Okay, so thank you, Lisa. And this page just includes some of those references that we already made throughout the briefing, so that DFAS.mil/tax law change. And then we did include the customer care center information on the bottom, so that can be used if you have personal questions that are related to your PCS travel. You can email or use that phone number that's listed there with option 1 and then 1. So Ms. Hill, we will open the floor to questions.
So anybody with questions, I ask you to please come to the mic because they are recording all this. If you're going to wait to come after her, please form a line on this side. And Shannon, right now we can only see the slides, but they're bringing the VTC POC to change it. Who is here from the LRC or from Mr. Brian Stemmer's office? Can you please come here? So first question.
Good afternoon. So this may be a question that's already been asked and answered on one of the frequently asked questions, but knowing that
they are going to be asking, how do you ship? Why can I get my own shipper? How do I get my total cost? Those were the main questions they've been asking. I don't know if the Stuttgart or the Wiesbaden people spoke to you yesterday. So a lot of the questions, what they answered was, you can contact us if you want all your costs. Okay?
So I saw that somebody from LRC is there, so I'll just touch on this. You're right, this does continue to come up. And so for Ocona studio assignments, the JTR actually prohibits personally procured moves. And so you are not able to do that. But from a command perspective, even if you were CONUS, that does have to be authorized as part of your orders, and that's not a DFAS decision, so I don't know if somebody there wants to touch on that.
do we know when the DTR will be reviewed to see if that can be changed into the law?
Yeah, it's a really good question, and that's something that I'm not aware of any effort to change, but it is something that we note is probably needed.
So the JTR is a living document. It is constantly changing. We have not received anything in our office, and we are the Army POC for JTR addressing any of these, but we are sending a note up asking if they're looking at this already. There's someone else coming up.
Hi, ma'am. I have a question.
Go ahead, sir.
I PCS from the States to Germany in August. Settled my voucher early September. I have not received a debt letter. I've emailed DFAS probably about 5 or 6 times because I knew that I would have a debt to DFAS. My PCS with a family of 4. And my last travel W-2 that I received off DFAS website was $94, which is not correct.
Okay, sir, can I have your name and I will look into that?
Go ahead.
Yeah, I have a question on behalf of the retirees. Since I retired 2 weeks ago, I came here with the expectation of being able to be sent home when my time was done, because they brought me here. And now I'm being told that, oh yeah, they'll do that, but that's no longer an entitlement, and that I can't even get the offset money and everything else, which she absolutely said during her talk. I don't know who thought this was a wonderful idea, and I'm just going to throw this caveat out. How are we going to get anybody to come out of the United States to work here if they're going to tax you to come here? This is, I have to tell you, took us all by surprise, and it is the most ridiculous thing I have ever heard in my entire life, and I can say that now because y'all don't pay me anymore. So, I came here with an expectation, and now there's not even a way to mitigate it or get a little bit of relief. So personally, I don't know that I'm even going to try to do this when I'm actually ready to go, because I honestly think, as the other young lady said, I can do this cheaper. Why should I pay taxes when I'm going to pay the same amount to do it myself? Is that what y'all wanted? So I guess you won, so yay.
You gonna ask? No.
I have a question.
I don't know how everybody else is, but I received a debt letter from DFAS, and I received a debt letter, and on the debt letter it calculates a net income received. So DFAS is going to take a certain amount of money each pay period. The net amount that they're showing on this debt letter does not match the net amount I actually receive, because I believe they are adding the LQA to the net amount that I receive. So the 15% that they're asking us to pay back is actually calculated to on the net amount of the actual income plus LQA calculated together, but LQA is not part of the amount you receive. So can you look into that?
So this is Shannon, and I am not, I'm not a debt expert. However, I will say that there were several things that you stated that are inaccurate. So the debt letter that you received, if you're part of that 3,500 group, was strictly for the new PCS entitlement taxes. What you're probably seeing on that debt letter is that there's an amount, let's say $1,400 that it would say, and that is the estimated disposal amount. And so that's the amount that we would be able to withhold from your check every 2 weeks. And Lisa, I don't know if I'm saying this correctly or not, but the amount that you see that you owe to DFAS, that is only for the taxes that we remitted to the IRS as per the new tax law for that debt letter. There are a couple dollar amounts on there that you will see, but that has nothing to do with LQA.
Right, Shannon, they have a little trouble understanding everything that the speaker said. However, that estimated disposable net amount is not your debt amount. That's the amount that debt management is looking. That's a percentage of that is the max that they could take for paycheck to make that repayment.
So,
but
Lisa,
yes, I agree with. There were two debt letters issued, one for the tax debt, and then one if you had HHG storage. That there was another debt letter, that was the second set of debt letters. But and if you have specific questions on your debt letter, please feel free to come in either with the Care Center or with an email, and we can help try to explain that.
So this is Yanir, and I will give her the email address so you can send the debt letter to you to review. But what she stated was that when they listed her income, it seems that they counted the LQA as part of the income. Like in the States, we get the base salary and locality and all become salary. Overseas, the LQA does not count towards salary. It's non-taxable income. In her debt letter, it seems that there was an error and they computed both together as total income. That is the question she had.
And the debt is calculated by a payment of more than 15% of this disposable income, which is not disposable income. It's actually net income plus LQA. So it's not disposable in quotation.
So, can you write down the email, that email address for the questions and give it to her so she can...
Thank you for that clarification. We'll work with debt management. I've taken the question down and I'll get the answer from debt management.
Excuse me, I'm trying to get my mind around this, trying to figure out how much money we're talking about. Are there any estimates, let's say for somebody coming from somewhere central in the U.S. over to Germany, what that would mean for them as far as tax requirements, how much you'd be expected to pay? Because I can't even come up with what number that might be, anticipating my PCS CONUS in a year and a half.
So, ma'am, are you one of the ones that did not receive the slides?
I did not receive the slides.
Okay, so on the slides, we did include an example claim from a CONUS to OCONUS location, and that would be able to provide you some information. To give you a frame of reference, I mean, the taxes are withheld, and it's 29.65% of the entitlements, and so whatever your PCS entitlements were, you can think of about 30% of that we would have to remit to the IRS. But again, you are able to file for that RETA claim afterwards, and so you will get substantially all of that back as part of your RETA claim.
In addition to that, your LRC representative is here in the room. You can contact their office and he'll explain that.
Also, you can contact, as you said, you can contact your local transportation office, and we can hopefully give you like a cost estimate. So as soon as you receive the before you receive your orders, and you know where you're going to, then call us at the office and we'll give you a cost estimate to let you know how much your household goods, how much to ship your POV.
What office is that, sir, that we call for the estimate?
Your logistics readiness center, your transportation office. So contact your local transportation office and they'll be able to give you a cost estimate. Like if you know where you're going to, just go ahead, give us a call, and we can just give you a temporary, like a cost estimate, and let you know how much ballpark is going to cost to ship your household goods. Okay, good phone number, DSN 528-2447, or DSN 528-2427 or 2425. We're also on the Finder Guide and also on the LRC 405 website.
Sir, the number in the Finder Guide for transportation here in K-Town is incorrect.
It's the right number. They updated it.
No, they didn't.
It's right here. It's five.
The numbers you just gave are correct.
Right.
The one in the Finder Guide is not.
I'm on the Finder Guide right now, sir. In the booklet, it needs to be updated. For 2018, it's updated. I'm sorry, for 2019, it's updated. Okay, I'll go ahead and check with Finder Guide, but it is on the website.
On the website?
Yes.
So in Stuttgart, the LRC person is affected by this, and she brought her sample. It is about a page and a half, and it gives you the total breakdown of everything you paid in the cost. So people, everything you paid in your move. People that came in or in that situation, you can get a very detailed, exact payout. The people going out, it's only going to be a guesstimate because it depends on where you're coming from, where you're going to, and all those things. but they can give you a very close estimate. From your local transportation office. They will do the printouts on both.
Hello, I just had a couple of process questions. In the beginning of the brief, you said that the residential sales were accepted. Does that also include residential purchases?
Hi, did you hear my question?
Sir, what was the question? I'm sorry.
At the beginning of the slide deck, you said that there were 3 exceptions, and one of those exceptions was residential sales.
Oh, you were talking about. Oh, yeah.
Is the residential purchase also accepted?
Purchase and sale is not excluded. He's talking
Right. If purchase and sale is included, the only residential sales that's conducted through the agency relocation services company or home sale program. If it's not conducted through that program, then it is taxable.
Okay, I think I understand that answer. The other question I have is, this increased income, does it count towards our retirement calculation?
No, it does not.
Of course not.
Hi, Shannon. This is the guy who called earlier with the taxes. I got cut off for some reason. I didn't hear the response for the question in regard to a new employee traveling overseas.
I don't think that we had that question, but for a new employee traveling overseas, if it's a new appointment, the only thing that you won't be eligible for is WTA and RETA.
No. I'd asked. I have not received a debt letter, and I filed my claim.
Oh, you're the debt. Oh.
Yes.
Yeah, I had just asked for your name. I thought that you were just going silent after I asked for your name.
No. I got disconnected, ma'am. So first name is Timothy. Last name is Thomas.
Do you have a middle initial? That's a pretty common name.
L.
Okay. Okay,
Social
we will look
Security,
into
date
that
of
for you,
birth.
sir.
Right. Too much PII.
Mother's maiden name.
Right. You have to send that through your.
I have a question. Can you hear me?
Yep.
Yes. And this may have been answered earlier. We were having difficulties connecting. Has anybody seen where this is these new entitlements?
Somebody has a hot mic and you're on hold. Is there somebody near them?
So somebody has put us on hold again.
So we're having IT try to hard mute. This is ridiculous.
Shannon, can you hear me?
Shannon. She's probably waiting for the music to stop.
Excuse me, ma'am, I have a question.
Shannon, are you on the line?
Schmidt with the revised W-2. I know you said that you're working on it. Do you have an estimate on when we will be getting those revised W-2s?
We are expecting that this is going to come later in the year, so in the fall time frame of this year.
Thank you.
Go ahead.
Shannon, hopefully you can hear me.
Just a clarification, I have a lot of employees who are already here, similar to the lady who spoke earlier, who's a retiree, but they're getting ready to PCS back. I just want to clarify, the POV shipment from Conus to, from Oconus to Conus is now no longer subject to tax, is that correct?
Correct, it is non-taxable.
Okay, and the TQSE that people may receive stateside, that was taxable before, it is still taxable, correct?
Yes.
Correct.
TQSA, for people coming this way, for my backfill folks that are coming in, that is not taxable also. It wasn't before and it still is not, is that correct?
You are correct.
Okay. The household goods shipment, that's the portion that you are not able to withhold right now because it's a third-party vendor. That's the part that you're hoping to get corrected, but soon. But people who are thinking about taking a job over here, you're saying about 30% of the estimated costs is what they should be expected that you would be withholding. Did I understand that correctly?
That is correct.
Okay, so, and the RETA payback, that is only if their taxable rate would be less than that amount. So if their tax bracket is not 15%, not 20%, but perhaps 32%, then they wouldn't be receiving anything back through the RETA because their taxes would actually be higher for that amount, correct?
That's correct. And so WTA can be very confusing. And so the example and how I've been trying to explain this is that it's really up to the traveler, and they should talk to their tax advisor, but it just depends on your financial situation. So when you're doing that initial travel claim and you feel like it would be beneficial to you to have a little bit of advanced money to help pay for some of those expenses, then you can elect WTA regardless of your taxable percentage, the bracket that you're in. So you are correct in how you stated it, is that if you are in a 15% tax bracket, for example, then when we are giving you that advance for WTA, we're giving that at 22%. So if you think about that mathematically, we're over advancing you for that beginning amount. And so once you file that RETA claim, we're going to be, that calculation will even out, and so we'll get back that difference between that 15% and that 22%, and then you'll owe that back to DFAS. Does that help?
That helps. One last clarification. If somebody doesn't do a WTA, but they just move over here, they owe tax on it, DFAS has to, you're taking the withholding, sending it to the IRS. And the RETA gets back only the portion that you sent to the IRS that is not in line with how much they owe in taxes, right? So if you withheld $2,000 and the amount that is taxable to them is $2,500, then they're not going to get anything back on the RETA because you actually didn't withhold enough. If you withheld $3,000 and the actual amount that they should have paid based on their tax rate, that's why you have to wait till you file your taxes to figure out your tax rate. If it's $2,000, then they'll get the $500 back. So they're not getting reimbursed the entire amount. The RETA is only to make sure that you're paying the taxes on the entitlements at your own tax rate, not at the withholding rate. Do I have that straight?
I think I followed all of that. Yes, I think you are accurate, but the RETA is only to reimburse the federal and state, and so you are going to, on slide 10, where we state the tax rates there, so you will not be getting that Social Security and Medicare back for the RETA reimbursement, so that's going to be part of the difference that you're seeing.
Okay, that's a good additional information. So it's those two categories, but even for the federal and the state, it's only to make an adjustment so that the person coming over is only paying the actual, their tax rate on those entitlements, not whatever the withholding is. But it's still taxable to them, correct?
Right.
Okay. And there's, okay, I got it. To the lady's point earlier, who was a retiree, you know, the other thing that happens when folks are coming over here from the States to over here is they're losing locality pay. So a lot of them are taking a pay cut when they get here. So I just wanted to put that out there for all of them. I mean, we are fully aware of it. I'm hiring a lot of people right now, and this continues to come up in interview questions. As we're interviewing people, they're asking us these questions. So I think to the points that were made earlier, it may have an impact on who we can get. Thank you.
Thank you.
Thank you, Shannon.
Shannon, I have a question.
Okay, I'm ready.
So we talk a lot about the federal taxes and the withholdings. Is DFAS accounting for local taxes, state taxes?
Sorry.
We are not right now.
Go ahead.
Yes, ma'am. I have a question regarding the public law. A lot of the provisions in the law have an expiration date. Does this have an expiration date to it?
It does. It expires in 2025.
Thank you.
Ms. Coppinger? Oh.
Yes, ma'am.
Okay, I have two questions, actually. The first one is, for those people who have long-term storage in the States, and they go back to the States either to retire or take a different job, when those goods come out of long-term storage, are they going to be taxed on those goods being delivered to their home?
Yes, because that'll be part of the household goods shipment piece.
Okay. And then the second question I have is, I'm not sure if you've seen the December 13th letter from the 21st Theater Sustainment Command Legal Office.
Yes.
Okay, so do you want to comment on that?
It's inaccurate, and they posted a new article in January and then again in February to correct that. The household goods shipment piece that's stated in there is non-taxable. That was incorrect. It is taxable.
Okay, unfortunately, I'm sorry to hear that.
Yeah.
Thank you.
Excuse me, ma'am. So on the temporary storage, you're only paying tax on whatever the bill is to have those temp storage shipped to your residence, correct? Or are you paying tax on the entire storage bill?
On the entire storage bill.
Let me help clarify. Hold on. There's temporary storage and non-temp storage, right, or long-term. I think, sir, what you said was temporary storage. Temporary storage, yes, is taxable. The non-temp or long-term storage of household goods for those in duty assignments, OCONUS, is not taxable.
Okay, thank you. So and for the long-term, do you still pay taxes on the shipping charge from the warehouse where it was stored to your residence?
Yes.
Go ahead before they jump.
Hello.
Louder.
I have a question.
Oh, ma'am, I have a question.
You're going to have to get louder.
Hello. Hello, ma'am. So I have a question from the resource management perspective, and that is, when we are creating those orders, those PCS orders, and putting on the different lines of accounting, do we now have to put a line of accounting for
non-temporary storage
WTA,
and you have SIP.
if an individual elects that,
Non-temporary
and
storage
RETA?
is long-term
So in
storage
other
and
words,
SIP is
two
like 90
additional,
days.
or two separate obligation items. Is that, am I
Still
understanding
gonna
that
get
correctly?
taxed on both of them.
But you do not get taxed.
From a resource perspective, this is Lisa, DFAS in the music party. I'm not sure if you can hear me, but yes, depending, I don't know if I can.
So I understood you correctly, we have two separate lines of accounting, one for WTA and one for
We booked it till 3, I think. Yes. Yes, Mr. Rowe has it with an address and. Shannon, can you hear us and can you try to talk over this music so we don't waste time here? Hey, Shannon?
Yeah. Hi, I can hear you, but it's barely.
Okay.
I have one question and one comment, if someone can hear me.
She can't hear.
I can hear you, sir.
Okay, my comment is I tried to go to the DFAS tax law change website, and when I typed in the address, hey, ma'am, I had a question. So for those DA civilians that came to Germany prior to enacting of this tax law, is there any effort in order to grandfather those folks, seeing how it was not part of their hiring agreement?
So this has come up a lot, and I'm going to let Ms. Hill take this one.
There are a couple of legislative proposals to request exemption of household goods, to request exemptions altogether. Law is typically not grandfathered, but the question is still being sent up. So right now, no answer on anything, sir.
The other question I would ask is, it's kind of glaringly apparent. Is there any, are any senior usurer or DA Army civilian leadership planning to talk at this briefing?
Sir, your only Army leadership is me from Headquarters DA. So if that doesn't work, I can forward you the email to my director. But I am here representing Headquarters Army.
Yeah, I would just thank the DFAS folks for trying to explain this to us and probably wisely doing it from a distributive menu.
So DFAS is VTCing in because we had several of them and we could not make everybody travel. Army G1 civilian personnel is my office, and there's 3 of us here, and we are, I didn't wear my Kevlar today, but I probably should have. We are raising questions. The thing that I do ask everybody to understand is a lot of this process came in late in the game. So while we have been submitting, while DOD has submitted, IMCOM, AFRICOM, USER, everybody is sending requests on legislative proposals, that is a long process. So we're still waiting for answers to come back. What we do commit to doing, at least from Army G1, CP, and DFAS, we will be sharing information as quickly as we receive it. If we have to do town halls again, or VTCs, or whatever forum to get more comments and questions to push up, we will do this again. So before anybody speaks, somebody on that line keeps putting on hold your phone. It is extremely inconsiderate. You're delaying everything. Please check your phones and don't do that. Thank you. Next question.
Can you advertise where the slides are posted at again, please?
If you go to the DFAS page, the email that she gave earlier, I believe you'll see some there, also in apan.org, and user a CPD will be uploading them.
Ma'am, there's some of us that are calling in by DSN phone only. We don't have any visual references.
Okay. Give him the address again.
Oh, it's dfas.mil/tax law change, all lowercase.
So you mentioned apan.org. When I go there, it's asking for a community. What community am I asking for to be a member of?
Army G1 civilian personnel.
I'm sorry, say that again?
Army G1 CP for civilian personnel.
Army G1.
Civilian personnel.
Say again, please.
Army G1 civilian personnel.
Okay.
Go ahead.
Thank you.
Yeah, how you doing? My question is tied to the RETA. If I understand the RETA correctly, you're reimbursing us for the costs that are associated with the tax that we have due to the additional income. Is that a correct statement?
Of an excess weight calls for an individual to civilians.
RETA is relocation income tax allowance. Its purpose is to make you substantially whole for the federal and state income taxes that were withheld for your taxable PCS entitlements.
So this is to reimburse you for the taxes on the tax that was withheld. Is that a correct statement?
No. To reimburse you for those taxes that were withheld. So with your taxes, when DFAS withholds taxes, we remit those to the IRS. When you come in to file your RETA, that's coming out of your agency's pocket. So your agency is reimbursing you for those federal and state income taxes, substantially all of the federal and state income taxes that were withheld and sent to the IRS.
And that RETA is considered income, correct? Which is also subject to additional tax. Is that true?
Yes.
Correct. A RETA is a taxable entitlement, and in the RETA calculation, it takes into account the taxes that are incurred on the RETA.
What I'm trying to wrap my brain around is that all of this additional income that we're receiving for our PCS move, for our household goods, anywhere from $20,000 to $50,000 is my guess, being a resource manager and seeing these things. It's going to put almost every single person that does it into a different tax bracket, which when that additional money goes on your tax return, it affects your AGI, which affects all sorts of things with your deductions, with your tax credits and your fundable tax credits, the amount that you can contribute to an IRA or not contribute to an IRA. There are some huge ramifications to an additional $20,000, $30,000 on your tax return. Regardless if the government's giving you the money for the tax on it, it doesn't take into account that the other $60,000, $70,000, $80,000 of your income is now taxed at a different rate, and you don't get tax credits that you used to get.
And those of us that came here before this is forced on us.
Of course, I'm part of the same group that's been here. I'll be looking to be grandfathered too, so to speak, but. And that's why I'm trying to wrap my brain around what you're paying for with the RETA, because I understood the RETA to be reimbursing me for what it's costing me to have that extra money. But it's not. It's paying me for what extra tax I have on the taxes that's paid for that money? Is that correct?
But it's not offsetting all the
Are you still there?
I am, sir. The RETA is designed to reimburse the traveler for most of the federal income tax paid as a result of their PCS move.
Okay, and what I'm hearing is the change that is, and there could be drastic changes. If I'm in the 15% tax bracket, using the old ones, because the new ones are, who knows what they are, they're like 12 and 18 and whatever. But if I'm in the 12% tax bracket and I get another $20,000 of income, I'm probably now in the 22% tax bracket. which used to be the 25% tax bracket. So if you suddenly take my income and I'm being taxed at that higher rate, and I understand that it's not all of my income, it's the income above a certain point is taxed at the higher rate. That's being taxed at a certain rate, but there's, like I said, deductions that I could take that I'm no longer eligible to take, retirement credit that I no longer get, a number of things that are affected by adding $20,000, $30,000 to my tax return. And I'm being conservative, I think, with $20,000, $30,000 on a PCS move. I think it's closer in the $50,000 to $80,000 range. And this is a huge burden on individuals, even if you're given the money for the taxes. Because it's not really giving you the money on the taxes, because there's other taxes that you're paying. You could be subject to AMT, the alternative minimum tax.
Contact your local representative. That's the one who made the laws, not these people.
I guess I can advocate that. Call your congressman.
Exactly.
Hello, I'm an HR manager, and I'm responsible for writing a lot of PCS orders. So what I want to know is, has there been discussion about the impact?
One thing you can tell them, I just saw it from Tyler that came out, is they put like a hot button on the user webpage that connects.
It's
to
on the
these
user
slides.
webpage now?
Yeah, but I'm not sure if there's a drill down. Like it's the CP thing, because I didn't even look at it. I saw it quickly, but I think there's a hot button.
They were waiting to upload them this week.
Yeah,
So
so it's
yeah.
already there
Okay,
now.
perfect.
He sent
That's
out
going to
the
be
link.
easier. Thank you.
If I ask you a question really quick and then determine if it's worthwhile bringing it up for the group
Sure.
or not. So for my case, I retired military over here. I still have my government move to take me back.
No, you don't. Not if you're getting OQA. It absorbs it. So it's still valid, but your civilian.
It's actually the
So the
first
other
time that
people
someone
were
has
yesterday,
brought that up, ma'am. So I don't know, Lisa, if you had any
you
thing
can't
to
double
say on
dip.
that, but
So it's
I'm
one or
not
the other.
sure.
And if you accepted the civilian and started using the
I'm
benefits.
unaware of any exceptions. I do know that the requirement is to use the government travel card. I also know that not everyone uses their government travel card.
Because I didn't have a transportation agreement.
You didn't get a.
But yeah, you're right, Shannon. That's the first time that question has come up, but I understand the concern because you're paying for that cost at full rate, and when taxes are withheld, you're not reimbursed the entire amount. So it's not even a split disbursement will help you there.
Would be the military. You now one of
So, Shannon, I got another
the.
question.
Her number, if I find paper, because she will be the best
Go
one
ahead,
to
sir.
give you all the details.
Okay, so what I'm trying to figure out is if I fall under the 5-year rule, which is the bane of being in Europe, when I hit that 5 years, the government is telling me I must move back to the States. So in that particular instance, is there any tabling of conversation about exclusion for these taxes or how they're going to address those? Because it's not voluntary. It's not something that I'm volunteering to go back to the States. I'm being forced to by my employer.
One is still valid. You never got
Yeah,
a
that's a
civilian
good point,
transportation
sir, and it
agreement.
has come up a couple times,
have it
that situation that you just gave, and then the other situation is for management-directed reassignments. And so right now, there are no exclusions for either one of those, but I will say that there's been a couple white papers put forward by, I believe, Ms. Hill. IMCOM was putting forward one. And so at the command level, they are discussing that 5-year rule and the impact that it has on these PCS entitlements. And so I would say, I don't know, Ms. Hill, if you want to add anything, but from DFAS's perspective, we hear you, but there's nothing as far as an exclusion right now.
Hi, I have a question. The majority of this cost is going to be on the third-party vendors. How are you going to get an accurate cost of third-party vendors onto the W-2? And my point is, I believe I'm probably in the 28 to 32% tax bracket. So if I don't have an accurate W-2 with third-party vendor costs, you are underpaying my tax obligation, therefore making me somehow a tax felon. How are you planning to enable me to accurately pay my taxes, or are you just capping it at 22%?
So the W-2 that was issued in January, you are able to file your tax return, and then because that income was not stated for you right now, once you get that corrected W-2 and file the amended return, we understand we are working with the IRS. They did reduce the threshold. I think before it was 90% that you had to pay from a tax withholding standpoint, and they reduced that to 75%. So unclear of what your exact tax situation is, but we are aware of the penalties, and we're working with IRS on that.
The more important question that I have is, how do you get a recognized, acknowledgeable third-party cost from the vendor? I just retired from the Army, and I've had the vendor charge me for thousands and thousands of pounds more than my shipment actually cost and weighed. So how do I get an accurate cost from the vendor with an accurate weight, and how does that get into my W-2? Because the vendor can just send whatever he wants. He has no burden of accuracy of sending a cost for my PCS move to you or to the IRS.
So I don't know if anybody from LRC is still in the room or not, but we did have a representative yesterday, and she said that I've never PCS'd personally, but they did say that you do have the authority to have a witness there when they're weighing your household goods, and understand that a lot of people already have those, and that process is already said and done. But that's really what the process is taking so long, is that we're working with Transcom to get the substantiating records in order to get that information on a personal travel basis. But I do hear your concern, and I don't know if anybody from LRC wants to join or jump in.
Yeah, so you can go to your local transportation office and request it's called a reweight, or you talk to the quality control. So if you know that you are over, okay, for civilians they have 18,000 pounds. So if you know you have 20,000 pounds, then the first thing you need to do is talk to the quality control. And then you request a reweight. That person, a government employee, has to go to the warehouse, and they have to verify that you have that same amount of weight. And then once you get once we get that weight, then we'll send it up to it's called up to DFAS, and they will do the calculations from there.
But the problem with that is, if I have 18,000 pounds of authorization, I have 10,000 pounds of household goods, and the vendor charges me for 14,000 pounds, it will never initiate the IG audit and complaint at the vendor, because I'm under the 18,000 pounds of authorization. But it will generate thousands and thousands of dollars worth of taxes for me. So I'm saying there's no accountability in the transportation cost system that was going to naturally transfer into a W-2 as accurate income. That's a pretty darn big flaw.
So what you're saying is that you have
Hey, excuse me,
but I'll never know that until I get my W-2.
Excuse me real quick, I have a question. So when we do PCS, Oconus to Conus, our HHG, we have damaged goods inside of our household goods. Once we get back to Conus, we do our reconciliation, say they give us $2,000 for damages. Is that also going to be on there as taxable income? Over.
Just saying there are flaws.
Thank you.
I don't know if you can hear me or not, but I believe in that situation that would not be taxable.
No.
Ma'am, I have a question as well. What I don't understand is that if I never actually have the money to pay the third-party vendor, how do I get taxed on that?
So that amount is included as taxable income for you, just like the PCS entitlements would be that are paid directly to you. It's a benefit paid to you or for you.
On my behalf?
Right.
how am I collecting that? That's the part I don't understand.
I guess the more important is how is the IRS going to collect it? Is that just a straight up payment that we're paying for that movement of household goods?
It's included on a travel W-2. So that taxable income amount is included in a travel W-2, and then when you file your income taxes, you include that as part of your income.
So right now, for the past, however many years, five, maybe 6 years, the household goods storage, as Shannon indicated in the briefing, at day 31, that has been taxable. So we get a file, DFAS gets a file from Transcom that has the traveler and their amounts for storage. We bring that into our system. It goes through the tax calculation. We remit the taxes to the IRS. That gets included on the traveler's W-2. It will be, we believe, it's our belief that will be a fairly similar process for the HHG shipment. So those third-party payments from that Transcom has record of, they're passing that information over to DFAS to do the tax calculation and remit those monies to the IRS.
I have a question. Can
That
someone
looks like money that I've earned.
the APAN address? Can someone spell phonetically the APAN group address for the slide presentation, please?
Okay, so before I give you the APAN one, I was just informed that Uthera already uploaded them. If you go to their main page, there's a hot button, and you click on it, and it'll take you directly to the DFAS page with the slides. If you still want, APAN is Alpha Papa Alpha November dot Oscar Romeo Golf.
I say again, I need the group phonetic spelling within apan.org. I copy the website.
Okay.
Can you spell
Alpha
the
Golf,
group?
Alpha Golf 1 Charlie Papa. If you have the button in that screen for search, you can also type Expeditionary Civilian, and it will take you to that group.
Could you spell the phonetic spelling one more time slowly and wait for me to speak? Finish speaking.
Alpha Golf 1 Charlie Papa. Assistant G1 for civilian personnel.
I copy Alpha Golf 1 Charlie Papa.
Yes, sir.
Copy Alpha.
Yes, I have a question. Could you put on the frequently asked questions that are long-term storage, what we have CONUS will not be taxed other than the shipment to the location? Actually, the storage of it will not be taxed. Over.
Yes, sir. We can clarify that with the FAQs. Everything that's been asked here and in the other town halls will be uploaded in the FAQs.
Thank you much.
It seems as though a lot of us are confused about exactly what is going on. Is someone going to make an effort to translate all of the changes into more layman's terms or easier terms that don't only include financial jargon, so we can all get a better understanding of exactly what is going on?
So, Shannon, do you want to take that, or should I?
I mean, unfortunately, we are just cascading the information the best way that we know how. So is there an example that you have that you're unable to understand?
No, I just think overall, I've been here since 2013, so I wasn't expecting to have to go through this. And so I'm just kind of trying to get my head around exactly, as far as the financial piece goes and number-wise, how this is going to affect myself and my family. And so there's a lot of things to consider and a lot of acronyms being used. I'm not exactly in the financial lane, and so I just want things to be easier to understand as a whole from everyone that's involved.
Yeah, sure, that's good. And I will say that Ms. Hill has stated in a couple of the other sessions that some of the commands are doing outbrief sessions for those that are going to be departing. And so I don't know, Ms. Hill, if that's going to go on for this group as well.
Yes, ma'am. So the other thing, the person on the phone, you were not looking at the slides. The slides are now on the user page. They are, it's a whole new thing, but they're not full of financial jargon, so you should be able to go through them. As far as the personal impact to you and your family, that is a conversation to have with your tax advisor, because nobody in the government should be making recommendations or detailed explanations on personal impact of taxes. Yes, ma'am.
Are you providing tax advisors here for us?
No.
Or should we contact people in the States which have no idea what's going on?
So no, we are not providing tax advisors, but when I was stationed here for 8 years, I went to H&R Block. I used the one in Lancho. So there are H&R Blocks here that are trained. I do suggest, and this is what I would do, is bring the slides with you if you go to a professional tax person. So I will tell you
Ma'am, I have
that
a retirement question.
Something that came up in Stuttgart, just on the side of that, in the past, the garrisons were working with, I guess, JAG, and there was tax advice being provided that was stopped, and now it's capped at E6 and equivalent pay and lower. Stuttgart, the deputy commander of AFRICOM, was going to take that and ask why and see if he can get that changed to get support. But again, personal is always better. Sir, there was somebody with a question on the line.
Yes, ma'am. I got cut off, so maybe somebody's asked this question before, but my plan was to retire in July, and it doesn't sound like I have a chance to get, any of that recouped through retail. That's correct?
That is correct.
Okay, then next question is, can I pay for my move myself so that way I can claim that on income tax?
Unfortunately,
rather
for
than,
Oconee,
the generous government moving it and then charging me for it and not being able to get my taxes on that back.
yeah, unfortunately for OCONUS duty assignments, the personally procured moves are not authorized, and that's part of the JTR, so that's per regulation right now.
So if I just stay here till my last day, then I'm no longer an employee, then I can do what I want. Correct?
I wanted to step in and correct that last statement, if you don't mind. Excuse me, as a 30-year comptroller, if you pay for your own move and you arrange your own costs, you can pay for your own shipment out of Germany. You just can't do it with your orders, and you can't go back and ask for reimbursement.
That's it. Mm-hmm.
So if you want to assume your own cost and then deduct that against your taxes as a moving cost, you can do that, but you will not get reimbursement.
Exactly.
Okay, well, so whatever.
So based on the town halls before and what Ms. Shannon answered, you are correct, you can do it. The key is you will not get reimbursed. So the JTR does not allow for daily moves from OCONUS to CONUS. So you're on your own if you do that.
Okay, and my second question is, has, the morale problem been addressed with this? Because as you can tell, there isn't one of us on the phone or in your, in the group that is happy about this. And I talked to State Department, and they come over here and they get paid for the household goods and back. They aren't getting hit with this tax. And I'm just curious as why is it DOD civilians and not everybody in the government? Because it sounds to me it's like this conference here. Hey, it's free admission, and then when you go to leave, hey, it costs you to get out. I mean, that's not too great. But when they were going to tax the active duty guys, like, we're going to take back 1% of your COLA increase, there was such a big storm that they stopped it. And that only took about, I think, 2-3 weeks. But here, I mean, it's affecting us by a lot of money, you know, thousands more than that, and nobody seems to care in our government.
Sir, I do think people care, and one of the things we are doing is working with attorneys and different organizations and commands to try and address this, but it is a law. So until it is changed or amended, we have to comply, and that is the information we're trying to share with everybody. We do not get to waive law.
I have a quick question. As a military retiree, if I try to use the flying out of Ramstein Air Base instead of flying commercially, will they tax me on the cost that I will pay, which is like $36 per each one of my family members, or they'll pay me the cost of what it would be if it was a regular flight? Hope I asked the question correctly.
So that question came up yesterday late in USERA, and they are doing the homework on it, as are we in AG1CP. In theory, what we believe is if you choose to fly that way, you fly that way. We will not reimburse the $40 for the trip, but whatever you get taxed on, if anything, would be based on that. It would have nothing to do with us. You can always pay your own way and not claim reimbursements. Now, what we're trying to find out, like with everything else, there's a ripple effect. So how many Freedom Express planes are available? How often are the flights? Is this going to impact? So users raising the question yesterday, we sent it up the chain. We're going to reach out to Air Force and see if there's something that can be done to increase the number of Freedom Bird people for, okay, now I'm aging myself. It's not Freedom Bird, it's Patriot Express. To see if that is an option for some personnel that may be eligible for that. Mm-hmm. Any more questions? Okay, there's a question walking up. One sec. You two?
I PCS'd here in 2017, October, and I did not move out of TLA until 22nd of December.
Mm-hmm.
I PCS'd in October 2017 and didn't move out of TLA until 20 December. So I did not get reimbursed until January. But I got a PCS or TDY tax W-2. So it was my understanding that your PCS started before this law came into effect, then your entire PCS was not taxed.
Shannon, did you
I
hear
think
him?
that you said that your PCS order issue date was 2017 and you were issued reimbursements in 2018?
Correct. I did not get reimbursed until 2018 and it was taxed. I got a W-2 for that.
You should have.
Lisa?
You would still be reimbursed.
I would say we could take your name and we can look it up. Is this your only, I'll say, travel activity? Is your PCS?
Oh, I've done TDYs, but that tax form didn't show the level of TDYs.
No long-term TDYs. But sir, if I could have your name, we'll look it up.
Okay, thanks.
He can give you the email address to send your name.
I'm a recent hire, just arrived in January, and was led to believe that I would have my shipping, my POV, all of that was paid for. At no time was I told that I was going to be paying taxes on that. So to me, that's deceptive hiring practices. I was not given the straight terms of what was going to be required of me. I mean, I feel like I was fraudulent hire. If people had let me know in advance, it would have completely changed my decision. So to give terms after the fact, it seemed illegal. And a breach, yeah, I agree, a breach of contract. So I just don't understand.
Government employee, there is no contract.
I understand the laws in effect, but why weren't we informed of that? And I certainly understand people that are already here and that are stuck. But for those coming, they didn't let us know that either.
So two notes on that. In speaking with USERA yesterday, USERA has been working with SHARA and CPAC, and all the job announcements starting last summer in July, when this was still, again, very fluid, still happening, the announcements include a comment of this is coming. It doesn't say percentage, it doesn't say how much, because we didn't know any of that. So announcements have that. The other thing that has happened so far, so you see that we are trying to get information out in a acceptable manner. The comptroller of IMCOM put together one slide that it's like a flow chart, and it walks you through the process. He shared it with the Stuttgart CPAC. They've been sharing it in tentative offers and then again in firm offers. I have now taken that with me. We're going to work it at Army headquarters level with SHARA headquarters to try and get it out to all CPACs who do the same. As you know, we have some CPACs doing one thing and some others. We're going to try to standardize it in this process now. But the heads up has been out and announcements at least as of July. Question? Any more questions? It's running over.
Excuse me, just to confirm, you said earlier that the revised PCS W-2s to include the household goods shipments won't be issued till this fall. Is that correct?
That's correct.
Workers' comp. Go.
Is there any effort being made to reverse the requirement of the $54,000 threshold to get tax advice through the JAG? I mean, since this is a change for civilian employees, there should be also now the requirement to change that threshold to include all civilian employees who are directly affected. And I believe that should be something that maybe came from the G1 or DA level, so we can get the tax advice to make sure we're not putting ourselves in a bind. I mean, the gentleman previously was talking about we've got fraudulent tax and fees and whatnot, and I'm not trying to go to jail. So is there some kind of move to help at least bring advice, guidance on an individual basis to the individual in conjunction with LRC, so the folks who have moved know what they're due, and the folks that are about to move know what they're walking into? You know, everybody's got their own personal situation and their own family and their own household and money that needs to be saved, and without knowing what you're walking into, it's going to cause a whole bunch of financial distress and issues. And if you don't know how to plan for that, people are not going to come over here. It's going to cause further distress and moral issues. So morale, my bad. But just as a recommendation, instead of trying to knock around bad ideas, trying to get actual help to the workforce. Thank you, Ellen.
So are we ready? Okay, so just introduce myself. I'm Sergeant Major retired till I retired out of Europe, right? So whenever that tax law came out, Tax Cut Jobs Act, things of that nature, like I'm a big wealth building guy. I teach wealth building to most of the commanders, sergeant majors, for those guys free, right? Which means I go in and pay all these different accountants to tell me what's the best answer for anybody in any bracket and or any situation, right? So with that, I'm going to tell you a couple of things that my tax guys are telling me, right? So first, if you're trying, first, every person should still want to come to Europe. Let me tell it flat out, right? If you're trying to hire a civilian to come to Europe, there are far more benefits than there are negatives. Hold on, and I'm going to go backwards, right? Because remember what they told you at the beginning is that you're only taxed on things that you ship here, which means you should come in making good decisions, right? One of the decisions, especially if you're hiring someone single, right? And I'm going to just use some of the clients that we just had, right? I told the young lady, remember, most of your bill is in fact household goods. They just told you that your long-term storage is taxable or not.
Not taxable
Not
until
taxable.
you get it
Hold
out.
on, let me go back. So therefore, the only thing that you're actually paying tax on is the shipment to storage and shipment from, right? That's small. So when you come here, because here in Europe, you have a number of real estate agents and those guys who will offer you a fully furnished place. So you still don't have to go out and acquire those as options, so consider those as options, right? The second part is, even if you ship household goods and things of that nature, remember, if you go in and actually run and do the math on it, right? If you're sitting out at, like the example they use, at 4,700 and your RETA takes away 3,700 of it, your real liability is minimal, right? It's actually truly minimal, because actually I don't believe in advocating for fear. So the second part is, most civilians, whenever you come over here, are getting TQSA, taxable or not. TQSA, non-taxable. So therein comes an opportunity for you as a civilian to go in and do what? Prepay most of the things that you could, in fact, use that TQSA for, so that you then incur some cost savings for things that you would have then paid out towards your taxable income.
See, that would have been great information.
So what you just encouraged people to do is defraud the government. That's not right.
Okay, so we're,
If I knew now, then yes, that'll be.
You're on a departure, right?
Right, yes. But again, in 2016, if I would have known what you're talking about in 2015, absolutely.
I would never
I would not put anything in non-tip storage.
Right, but I would say if you're departing, it's different.
Yeah,
I'm departing.
Departing is different.
yes, sir.
Correct.
Can I just say one thing, Alex? Right now, there's about 100 of us still in here, and there was a lot more before. We've been here just under 2 hours, right? If we go home now and spend just under 2 hours writing our representatives or senators and complain about this issue, right? That's where you're gonna get it solved. These people have nothing to do with it. They're following the law. And our lawmakers made this law. So please, go home and write those people.
You know, with all due respect, sir, you also, that's exactly what my chain of command told me when I brought this issue to their attention. They said it was right, your congressman. But this really is a larger issue in terms of, from a usurer, both military and civilian leadership, both in retention and recruiting issues, the inadequacy in terms of the people that were already here, not to mention those folks who want to have now been told they're going back because USER is cracking down on overseas extensions as well. So it's a compounded problem. I think a lot of people feel the frustration because the one thing that's been absent in all of this situation is leadership, both from the civilian side and from the military side. If for no other reason, doing a town hall and at least trying to express to the workforce what it is they are trying to advocate or do on their behalf. We understand it's the law, but it's you know, in the absence of leadership, you're going to end up with chaos.
So if there are no more questions, I am going to close this out. Please contact us for questions. Please send us your questions. We cannot help what we don't know is an issue. Thank you for your time.